Good morning. After remaining range-bound for consecutive 11 trading sessions, the Indian markets finally broke the barrier. After opening on a relatively positive note, the Indian markets surged in the late afternoon as frenzied buying was seen amongst the battered blue-chip counters such as ITC, Reliance, HDFC Bank, and TCS. Finally, the Indian markets ended the day 1.3% up. Yesterday, mid-cap and the small-cap counters also gained from this rally and surged over 1.6% each. FIs once again emerged as a net buyer as they bought goods of around 285 crore yesterday, after remaining relatively net sellers in the previous two trading sessions. Yesterday, the realty sector was a major sectoral gainer, surging up 3.2% on expectations of reform in the housing and the infrastructure space in the upcoming budget. Yesterday, the world markets witnessed some correction on account of two major events. Firstly, the German June IFO business condition, a measure of the revival amongst the business class in Germany, fell more than expected to a 6-month low. And secondly, was the ongoing disruptions around Iraq, which could lead to hampering among the crude oil prices in the world. On account of these two events, the world markets witnessed some correction yesterday. The US markets entered the day on a relatively negative zone yesterday. Asian markets were trading on a relatively flat zone after the Japanese Prime Minister offered little assistance for revival of structural reforms in the economy. Coming to some news for today's session. The Indian government has decided to set up an infrastructure fund with a corpus of over 1 lakh crore with the help of Japanese investment to revive the Indian infrastructure space. Secondly, Reliance Industry, the Tata Group and the Aditya Birla Group have lined up a capex of over 3 trillion over the next 3 to 4 years on account of expectations of the revival of the Indian economy due to the reforms which are going to be laid in place over the next couple of years. The Indian markets are expected to be positive for today's session. Major resistance and support levels for Sykes comes around the level of 25482 and 25194 levels, while major resistance and support levels for Nifty comes around the level of 7662 and 7571 levels. Thank you very much and happy investing.